Hey, what's up guys, John here. The Florida housing market is falling apart. 200,000, well 198,000 to be exact, active listings right now inside of this single state. 56,000 home buyers canceled for the month of June, their home buying purchase. 56,000, boom, cut. 1 out of 4 home sellers are slashing their prices to try to attract a home buyer.
After updating the home with new paint, floors, and appliances and reducing the price by $40,000, it's not moving.
I put $25,000, $30,000 into something I lowered the price on.
Now, many people, a couple, 6 months ago, a year ago, said Florida, no inventory. It is an absolute amazing place to own real estate. Well, the complete opposite is unfolding right now. And in fact, what we're going to start to see here is this 2008-like event unfold inside of Florida. I think this time it's actually going to be worse. If you look at data and you look at where consumers are and you look at where homeowners are, let me give you an example. Let's look at this home right here that is under construction. Beautiful, beautiful property about a block from the ocean in Delray Beach. This property, you can see the rust forming on the steel beams. You can see all the foliage, everything just getting grown out through the rocks. It looks like contractors aren't really touching this project, and you have to ask yourself why. Why are they not doing this? Well, I'm going to show you. I'm going to show you what's happening here and why I think we're going to be walking into the biggest buying opportunity, the biggest real estate investing opportunity that we'll ever see in our lifetimes over the next 6 to 12 to 24 months. As most of these homeowners are completely wiped out and this economy goes through a major overhaul. Look at this property, for example. This house right here, listed $4,750,000. If you were to put 20% down on that house, let's call it $1 million. Say you put $1 million down, you could put that $1 million into a CD and you'd make almost $4 grand a month. Doesn't sound like a lot, right? But the house right up the street here in a more prime area that is literally almost on top of the beach, there's just one little property and then you're across the street and you're on the beach, it's $15,000 a month. $15,000. So if you apply the money from the CD to that, you'd come out of pocket maybe $11,000 a month, versus this would be a $30,000 a month mortgage payment. On today's interest rates, today's insurance in this market, today's taxes, $30,000. Who's gonna pay 3 times more to own than to rent right now? Doesn't make any logical sense. What about this? This property right here, listed for sale, this land. Who's going to buy land to develop in Delray Beach or Cape Coral or Miami or any of these markets today with sky-high insurance, taxes, construction costs, labor costs, borrowing costs, everything's through the roof, and you have a ton of new competition and homes coming on the market. Look at this house right here. This is brand new construction. This just finished up. The one right next to it is they're finishing up to get ready to list it for sale. They already have the realtor's information right there. But what's shocking is when you look at just how big this bubble really is. In Miami, there's more construction inside of this single city than throughout the entire West Coast, from Seattle all the way down to San Diego. That's how big this problem is. Rents have already dropped between 7 and 8% in Miami. In Jacksonville, it's north of 12%. So you start to see this, what is this gonna mean? Well, look at the numbers, follow the numbers never lie. In 2021, every real estate investor that had multifamily property in LA, San Francisco, New York City, they were looking at what the future was going to look like and what they should be doing. Many of those people decided, you know what, Florida is the place to be. Miami's the spot to be. I'm going to 1031 exchange, meaning I'm going to sell my property. I'm going to defer the taxes to the future. I'm going to buy another property of like kind, and I'm going to move to Florida and capitalize on this massive rent growth and the freedom that Florida offered. And so what happened? They're buying these deals in a very competitive market, a very low interest rate environment at 4% and 5% returns. When rents drop 7%, 8%, and insurance and taxes go through the roof and a ton of inventory hits the market, what does that mean? Well, it means big problems. That's what it means. And look at this house, absolutely beautiful. There's the beach, right there, right? That's what it's gonna mean, big problems. And so when you look at what's happening, not just in multifamily, not just in single family, the job market, the overall economy, it's pretty clear what's going to happen next. In that 2021 era, what happened? A lot of people were looking for a way, not just the people that owned multifamily and commercial real estate, looking for a way where they can go from their expensive, high regulated city, high tax city with no freedoms to a place like Florida, right? And so what do people do? They went and they said, you know, I'm paying $5,000 a month in San Francisco or one of these other cities. I'll go buy a house. I'll go buy a house in Florida. And so they went and bought a house in Florida, thinking everything was going to go back to 2018 and 2019. And what actually happened? It didn't go back to 2018, 2019. In fact, inflation got worse. Insurance and taxes got a lot higher than most people anticipated. The cost of living continued to rise. And then on top of that, a lot of these bosses, employers, where they were formerly paying their employees a lot of money, are saying, you know what, we're going to issue layoffs now, or you got to come back to work. Well, what is this going to mean? It's going to mean it's going to be a race to the bottom inside of this housing market. But what's fascinating this time around, though, is when you look at the home buyer pool. The home buyer pool is either all cash, you got a ton of money, or you got nothing. That's the home buyer pool. And so you have to ask yourself this big question. When you have this massive, massive influx of home sellers that need to get out from underneath these properties, and you have a smaller pool of buyers, who's going to control that game? It's going to be the home buyers. This time, though, it's going to be different, because even the people that have money now are looking, saying, you know what, what's the highest yield that I could get on this money, right? Is it buying a house like this for $5 million or $4,750,000? Is it renting a house over here? What it's going to be is it's going to come down to dollars and cents. And soon, these buyers are going to step in and just start scooping up everything at basement prices, like just rock bottom prices. And why? Well, because the currency is getting absolutely crushed, and they need to park this money somewhere that can store it. But this time, though, what we're likely going to start to see here is we're going to see rents fall in such a radical way where home sellers have to do things that most people couldn't imagine to try to attract these buyers that have money. What I mean by this is a lot of these home sellers are going to try to rent out their homes. A lot of these retirees, Florida's a retiree state. You got a ton of retirees that always come here to buy properties, second properties. When things get hard, what are they going to do? They're going to rent out their homes. So when you have these retirees renting out their homes, these property owners that bought properties that can't sell, they're going to try to rent out their homes. You have an unlimited amount of construction, so it feels, inside of Miami. That's all going to be for rent. So it's going to be a race to the bottom in rent. It's going to be so much more cost effective and affordable to rent versus owning one of these properties that it's going to be an absolute problem for these property owners, but an absolute massive opportunity for home buyers and investors that are looking at this saying, you know what? Maybe the real long-term plan here is to buy property, not to rent it, because that is the truth. You want to own property, you don't want to rent, especially when you look at this consolidation of wealth that's going to be forming over the next 5 years. Large corporations are going to be dominating. So you want to own property, but you want to own property you can hold on to. And a lot of these property owners, they're not going to be able to hold on when things hit the fan, because it won't make sense to, and they won't be able to. The borrowing costs are absolutely through the roof. A lot of these investors, they have these commercial loans that they have to refinance in a 3, 5, 7-year window, generally. And a lot of these loans were taken out in 2021. Do the math. In 6 months, that's going to mark a 3 to 4 year window from when they took out that initial loan. A lot of these loans are going to start coming due in a higher interest rate, high insurance, high tax environment with a ton of inventory. It's going to be an absolute problem for these people. And so what is going to happen next is new investors, these large institutions, tech funds. I mean, you're going to see private equity firms, insurance companies, pension funds, sovereign wealth funds, all stepping in saying, you know what, I want to buy real estate too. And they're going to buy it directly from the bank, and they're going to buy tons and tons and tons of inventory at a much lower cost basis. They're going to be able to rent out their inventory for even less, putting more pressure on these homeowners trying to attract buyers. So I think that we're going to see this scenario unfold. And if you're sitting on cash, you have good credit, you're really responsible with expenses, it's going to be a major buying opportunity. But if you're one of these property owners in Florida where you need to sell, that's a problematic position to be in, because whenever you have to sell, you shouldn't have bought it in the first place, right? Whenever you have to sell, you can't hold on. It's a really big issue. And you're seeing this across the entire state. 198,000 active listings. 18 months ago, 6 months ago, 12 months ago, it was hard to find a great house in Florida. There's such little inventory. Every single month, more inventory is coming on. Every single month, condo assessments are getting a little bit more, expensive. Every quarter, every year, getting a little more expensive. Everything is going up, yet real wages are coming down. The middle class is getting cut right in half. So if you're thinking about making some really big moves in Florida, do your homework. Make sure you're not buying some entry-level deal. You have to buy an incredible property at a great price point to hedge yourself against what is coming. Because what we're walking into, I think it's gonna be far worse than 2008. In 2008, think about this. In 2008, it was a mortgage crisis. That's what it was. This scenario we're in, this is a job market crisis. AI, tech, everything's gonna essentially roll over so many jobs. This is an insurance crisis unfolding. This is a tax crisis unfolding. This is a mortgage, you're seeing interest rates rise at the fastest pace in history, right? A mortgage crisis unfolding. You're seeing every single industry getting completely overhauled and changed. This isn't like a 2008 scenario. In 2008, 2007, 2006, the average home price at the peak on a national level is about $225,000. Now they're saying it's closer to $450,000. In Florida, in certain pockets, it was closer to $500,000, $550,000. Yet real wages have barely moved. Cost of car insurance, everything has doubled or tripled. So what's going to happen? The cost of food, everything's going to continue to get more and more expensive, and this affordability crisis is going to continue to grow. And renters that were thinking about maybe buying a home are going to be looking at ways to save money, not spend it. And buying a property at these price points, no matter where it is in Florida, it barely makes any sense. I would say it doesn't make any sense in most cases. And so this is where the general consensus is, that homeowners are in really big trouble. Renters are going to be able to have a lot more opportunity and a lot more options. And people that are putting themselves in the best position now will have the most opportunity tomorrow. What do you think about this entire situation? Where do you see this going? I just drove across the entire country. In Nashville, I was in Cleveland, Cincinnati, San Francisco, LA, Austin, Phoenix, all these markets, studying these local real estate markets. And a lot of these markets are in massive trouble. But these boom bust markets, the Las Vegases, the Miamis, they always fall a lot harder. They always fall a lot harder. It was true back then. I think it's even more true now. What do you think about this entire scenario? Let's have a conversation about this below. If you'd like to fix your credit to position yourself for funding, we'd love to help you. Maybe you're thinking about getting a mortgage when the market crashes. You're going to want great credit. So if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any issue at all like that in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Catch you next video.